Joining me now is Christian Ledoux. He's Director of Investments at CAPTRUST. Christian, it's good to see you again. I mean, broadly speaking, I think you're pretty constructive on the economy. And do you have to be for these investments to work right now?
Hi, Kelly. Nice to be back. Yeah, I don't think you need to be constructive on the economy in order to start liking some stocks here. I mean, let's face it, 40% declines for the median stock in the Russell 3000 index says that a lot of this is already baked in. But if you are looking for opportunities, there's plenty abound in various categories.
All right, so let's talk about a couple of them. One is a name that has certainly gotten more respect back, Berkshire Hathaway. But is it a name that, explain why you think it's kind of the right place and the most conservative place for people who are a little bit more cautious on the market?
Well, first and foremost, this is a company that thrives in a market like this. They're always looking for opportunities to buy good businesses on the cheap. And, the motto, buy when there's blood in the streets, there's certainly a lot of that. So you've got opportunity to put that $100 billion of cash that's on their balance sheet to work. And then on top of that, you've got the core business of insurance, which benefits from higher interest rates. And then on the flip side, when we come out of the slowdown in the economy, you'll see the rails and the manufacturing businesses start to perform better. So you got a little bit of everything there.
All right, so that's the case for Berkshire. Not too controversial of a case, I wouldn't imagine. Amazon maybe a little more so. Why is Amazon a name you like here?
Well, I heard one of the traders in the last session say it's their top pick for today. I'd echo that. I'd say, Amazon is one of the companies that you want to buy after they have a misstep. This is certainly one that they had last quarter by building a little bit too much on their warehouse capacity at a time when e-commerce was giving a little bit back to bricks and mortar. But I would say with higher gasoline prices, you might see a few more people skip that trip to the mall and stay home in order. And then on top of that, you do have that AWS business that continues to crank away. So you do need to pick and choose in the big cap tech land. And this is one of the ones that I would pick.
I just wonder about Amazon, where it was, the place you could kind of park your capital for the past 10 years. But is that necessarily going to be true for the next 10?
Absolutely not. You have to pick your timing. And this is a good time.
In other words, you wouldn't own it at any point, for any reason. You just think this is a uniquely cheap window of opportunity?
Right, after a misstep, and they're likely going to correct that misstep real quick here.
All right, so the final name, the ticker is RMBS, but it has nothing to do with mortgages. Tell us why you like Rambus.
Rambus is a small semiconductor company. This had actually a bad image for a while. For 10 years or so, they were simply milking their patent portfolio and upsetting their customer base by raising the royalty rates. A few years ago, new management comes in, decides to make peace with their ecosystem, and on top of that, start to develop their own products. And now they've hit into the next cycle for what they sell, which is memory buffers. Memory buffers are a lesser known semiconductor, but it's highly needed for bigger end computing like artificial intelligence and machine learning. So you'll see a big cycle coming that will double their addressable market. And this time, they're not giving it out to their competitors. They're just keeping it for themselves, and they're going to be in the leadership position. All
right. And all these names you mentioned go from kind of most conservative to most opportunity. That's how we describe the riskier ones. That's the case with Rambus, perhaps. Christian, thanks for bringing us these ideas for this market. We appreciate it.